Question 1. Which of the following statements best describes the relationship between cyber insurance and risk management in an organization? A. Cyber insurance is a substitute for strong cybersecurity measures and can be relied on solely to manage cyber risks. B. Cyber insurance is part of a broader risk management strategy, helping mitigate financial losses while cybersecurity measures address prevention. C. Cyber insurance should be purchased only after a company has experienced a cyber attack to mitigate future losses. D. Cyber insurance is only useful for large companies with high value assets, and small companies should not invest in it. Answer. B. Cyber insurance is part of a broader risk management strategy, helping mitigate financial losses while cybersecurity measures address prevention. Explanation. Cyber insurance is not a substitute for effective cybersecurity practices. Instead, it is a tool used in conjunction with cybersecurity measures to manage the financial risks of cyber threats. Strong cybersecurity protocols like firewalls, encryption, and employee training are essential to prevent cyber incidents, while cyber insurance helps address the financial consequences if an attack occurs. It is a complementary part of an organization's broader risk management strategy, covering aspects such as financial recovery, legal expenses, and data breach costs. Question 2, scenario-based. Mr. Anderson, the Chief Information Officer of a mid-sized financial firm, is concerned about the increasing cyber threats targeting the company's sensitive financial data. The firm has implemented strong cybersecurity measures, including multi-factor authentication and regular employee training. However, Mr. Anderson is unsure about the specific cyber insurance coverage that will best suit the firm's needs in case of a data breach involving personally identifiable information, PA, of clients. Which of the following types of cyber insurance coverage would best cover the firm in this scenario? A. Cyber extortion coverage. B. Data breach liability coverage. C. Network security liability coverage. D. Media liability coverage. Answer. B. Data breach liability coverage. Explanation. In this case, the firm is concerned about the exposure of personally identifiable information, PA, of clients. Data breach liability coverage is specifically designed to address costs related to a data breach, including legal fees, notification expenses, and credit monitoring for affected individuals. This type of coverage helps mitigate the financial and legal consequences of a breach involving sensitive personal data. Cyber extortion coverage covers costs associated with ransom demands following a cyber attack, not data breach incidents. Network security liability coverage is relevant to issues involving the firm's network security, such as breaches due to vulnerabilities in firewalls or unauthorized access. Media liability coverage applies to situations where a company faces legal action due to content it publishes, such as defamation or copyright infringement, and does not directly address data breaches or PII exposure. Question 3. Which of the following is a key consideration when determining the premium for a cyber insurance policy? A. The number of employees in the company. B. The company's cybersecurity posture and risk mitigation strategies. C. The company's annual revenue. D. The company's geographic location. Answer. B. The company's cybersecurity posture and risk mitigation strategies. Explanation. Cyber insurance premiums are heavily influenced by the company's cybersecurity posture. Insurers assess how well the company has implemented preventive measures like firewalls, encryption, intrusion detection systems, employee training, and incident response planning. A company with strong cybersecurity practices is seen as a lower risk, which can lead to lower premiums. The number of employees in the company and annual revenue may affect the scale of coverage needed, but they are not primary factors in determining the premium. Geographic location may be relevant in terms of compliance with specific regulations, but is less significant in premium determination compared to the effectiveness of cybersecurity measures. Question 4. Which of the following best describes the role of subrogation in cyber insurance claims? A. Subrogation allows the insured to take legal action against third parties for cyber incidents and recover losses. B. Subrogation refers to the process of assigning blame to the insured party for causing the cyber incident. C. Subrogation allows insurers to recover the costs they paid out in a claim from third parties who were responsible for the cyber event. D. Subrogation is the process by which the insured is paid twice for a cyber incident, once by the insurer and once by a third-party vendor. Answer. C. Subrogation allows insurers to recover the costs they paid out in a claim from third parties who were responsible for the cyber event. Explanation. Subrogation is a process in which an insurer, after paying a claim to the insured, seeks to recover the paid amounts from third parties that may have caused or contributed to the incident. For example, if a third-party vendor's breach led to a data breach, the insurer may pursue the vendor to recover the cost of the claim. This process ensures that the responsible party bears the financial responsibility, not the insurer or the insured. Option A incorrectly describes subrogation as allowing the insured to take legal action, but it's the insurer's right. Option B is inaccurate, as subrogation has nothing to do with assigning blame to the insured. Option D is also incorrect, as subrogation prevents double payment for the same loss. Question 5. Which of the following regulations applies specifically to the protection of consumer data in Georgia and requires companies to notify affected individuals in the event of a data breach? A. General Data Protection Regulation (EDPR). B. Health Insurance Portability and Accountability Act (HIPAA). C. Georgia Personal Identity Protection Act (GIPA). D. California Consumer Privacy Act (CUIA). Answer: C. Georgia Personal Identity Protection Act (GIPA). Explanation: the Georgia Personal Identity Protection Act (GIPA) specifically governs the protection of personal information in Georgia. It mandates that businesses notify affected individuals within a reasonable time frame if their personal information is compromised in a data breach. GDPR is a European regulation focused on data protection and privacy within the European Union. HIPAA governs healthcare-related information and does not apply to all industries. CCPA is a California law that applies to companies doing business in California, not Georgia. Question 6. Which of the following types of cyber insurance coverage would best protect a company from losses incurred due to an attack on its network infrastructure that disrupts operations? A. Business interruption coverage. B. Privacy liability coverage. C. Forensic and notification costs coverage. D. Media liability coverage. Answer A. Business interruption coverage. Explanation: business interruption coverage is designed to protect a company against financial losses resulting from disruptions to operations due to a cyber attack. This coverage can help cover lost income and additional expenses incurred while restoring normal operations following a network breach. Privacy liability coverage focuses on the legal costs and damages related to breaches of personally identifiable information (PII). Forensic and notification costs coverage handles the expenses of investigating a breach and notifying affected individuals. Media liability coverage covers legal issues related to content, such as copyright violations or defamation, and does not address operational disruptions caused by a cyber attack. Question 7. Scenario-based. Sarah is the CEO of a medium-sized e-commerce company that sells products to customers across the country. Recently, the company's website was targeted by a DDoS distributed denial of service attack which caused significant downtime and lost revenue. Sarah is now reviewing the company's cyber insurance policy. What type of cyber insurance coverage would best address the financial losses caused by this DDoS attack? A. Network security liability coverage. B. Cyber extortion coverage. C. Business interruption coverage. D. Data breach liability coverage. Answer: C. Business interruption coverage. Explanation: a DDoS attack typically causes disruption to online services, rendering the company's website inaccessible to customers. Business interruption coverage is specifically designed to cover the loss of income and additional costs resulting from such disruptions. This coverage can help the company recover lost revenue while its operations are temporarily halted. Network security liability coverage addresses liability for breaches or failures related to the company's network security, but not the lost revenue due to operational downtime. Cyber extortion coverage applies in cases where the company is threatened with a ransom demand to halt or reverse a cyber attack, such as ransomware. Data breach liability coverage is intended to address issues arising from the unauthorized disclosure of sensitive data, which is not the primary concern in this case. Question 8. Which of the following factors is most likely to lead to higher premiums for a company's cyber insurance policy? A. A demonstrated strong cybersecurity posture with active risk mitigation strategies. B. Their history of frequent data breaches or cyber incidents. C. The company's implementation of an employee cybersecurity training program. D. The presence of third-party vendors that provide enhanced security services. Answer: B. A history of frequent data breaches or cyber incidents. Explanation: A company with a history of frequent data breaches or cyber incidents is seen as a higher risk by insurers. Insurance premiums are generally higher for companies that have experienced multiple incidents because the likelihood of future claims is increased. Insurers base their pricing on the risk of loss, and a history of claims signals a higher probability of future claims. A strong cybersecurity posture and employee training typically reduce premiums because they demonstrate proactive risk management. The presence of third-party vendors with security measures is positive but does not directly impact the premium as significantly as the company's own track record. Question 9. Which of the following actions is NOT typically included in the claims process for cyber insurance? A. Reporting the cyber incident to the insurance provider immediately after discovery. B. Gathering evidence of the cyber attack and its impact on business operations. C. Attempting to resolve the incident internally without informing the insurer. D. Coordinating with forensic investigators to assess the extent of the breach. Answer: C. Attempting to resolve the incident internally without informing the insurer. Explanation: cyber insurance policies require prompt notification of any cyber incidents to the insurer as part of the claims process. Failing to inform the insurer can result in denial of coverage. Insured entities are typically required to report incidents, gather evidence, and work with forensic experts to assess the damage. Reporting and evidence gathering are key steps in ensuring that the insurer can properly evaluate the claim. Attempting to resolve the issue internally without involving the insurer may violate the terms of the policy, as insurers often want to be involved in managing and mitigating the financial consequences of a cyber event. Question 10. Which of the following is a key characteristic of a cyber insurance policy's coverage limits? A. The coverage limit is a fixed amount regardless of the severity of the breach. B. The coverage limit applies only to legal costs incurred in defending against cyber claims. C. The coverage limit represents the maximum amount the insurer will pay out for a single claim or event. D. The coverage limit automatically adjusts based on the insured's risk profile over time. Answer: C. The coverage limit represents the maximum amount the insurer will pay out for a single claim or event. Explanation: the coverage limit defines the maximum amount an insurer will pay in the event of a cyber-related claim or incident. This amount is set when the policy is written and may vary depending on the type of coverage and the insured's risk profile. Option A is incorrect because coverage limits are not fixed and can vary depending on the policy and the coverage selected. Option B incorrectly limits coverage to legal costs, but the coverage limit applies to all aspects of the claim, including damages and response costs. Option D is incorrect because the coverage limit is fixed and does not automatically adjust based on the insured's risk profile. Question 11. Which of the following is true about a cybersecurity breach response plan in the context of cyber insurance? A. It is required by law for all businesses to have before purchasing cyber insurance. B. It is typically used by insurers to assess the risk level of a business. C. It is a set of procedures used by the insurer to recover losses after a cyber attack. D. It is an optional plan that helps a business manage a cyber attack and minimize damage. Answer: D. It is an optional plan that helps a business manage a cyber attack and minimize damage. Explanation: a cybersecurity breach response plan is a set of internal procedures that a business uses to handle and mitigate the impact of a cyber attack. While it is not legally required for businesses to have a response plan in place, having one can help reduce the severity of the attack and may improve the company's standing with insurers. Option A is incorrect because it's not a legal requirement. Option B is partially true, as insurers may assess a business's preparedness, but the plan itself is not a direct evaluation tool. Option C is incorrect because the response plan is developed by the business, not the insurer. Question 12. Which of the following would typically be covered under cyber insurance's data breach liability coverage? A. Legal fees and notification costs associated with a data breach. B. Repair costs to physical IT infrastructure. C. Loss of income due to business interruption. D. Costs related to recovering stolen intellectual property. Answer: A. Legal fees and notification costs associated with a data breach. Explanation: data breach liability coverage covers the legal and notification costs arising from a data breach involving sensitive personal or corporate data. This can include the costs of notifying affected individuals and legal fees for defense against lawsuits. Repair costs are typically covered under a different policy, such as property or equipment coverage. Business interruption is covered by a separate business interruption policy. Recovering stolen intellectual property is generally not covered under data breach liability, but may be covered under other types of insurance. Question 13. Which of the following is not typically a part of a cyber insurance policy's exclusions? A. Acts of war or terrorism that impact a company's digital infrastructure. B. Losses arising from employees accessing unauthorized data. C. Financial losses due to ransomware attacks. D. Data breaches resulting from unpatched software vulnerabilities. Answer: C. Financial losses due to ransomware attacks. Explanation: cyber insurance generally covers financial losses from ransomware attacks as long as the policyholder follows the proper protocols for reporting and mitigating such risks. Acts of war or terrorism are commonly excluded in cyber insurance policies because these events are beyond the control of the insurer and are generally considered high risk. Employee access to unauthorized data and unpatched software vulnerabilities could lead to exclusions if they result from negligent security practices. Question 14. Scenario-based. John runs a large e-commerce platform and is concerned about a potential data breach. He is reviewing his company's cyber insurance policy and asks his broker about coverage for customer notification costs in the event of a breach. What coverage type should John be most focused on? A. Privacy liability coverage. B. Forensic investigation costs coverage. C. Data breach notification coverage. D. Network security liability coverage. Answer: C. Data breach notification coverage. Explanation: data breach notification coverage specifically covers the costs of notifying affected individuals and regulatory bodies after a data breach occurs. This is a key element of handling data breaches in compliance with data protection laws. Privacy liability coverage is more about the legal consequences of a breach, not the notification costs. Forensic investigation costs coverage covers the costs of investigating the breach itself. Network security liability coverage deals with the failure of security measures but does not cover notification costs. Question 15. Which of the following is an example of a social engineering attack that could be covered under cyber insurance? A. A hacker exploiting a system vulnerability to install ransomware. B. An employee falling victim to a phishing scam resulting in the disclosure of company financial information. C. A company's server being physically stolen during a burglary. D. A natural disaster that disables the company's IT infrastructure. Answer: B. An employee falling victim to a phishing scam resulting in the disclosure of company financial information. Explanation: social engineering attacks involve manipulating individuals to divulge confidential information or perform actions that lead to a security breach. Phishing scams are a common form of social engineering where attackers trick employees into providing sensitive information. Ransomware attacks and theft of servers are not considered social engineering attacks, but rather direct attacks on systems or physical assets. A natural disaster is not typically covered under cyber insurance; it would fall under property insurance. Question 16. Which of the following scenarios would most likely be covered under cyber insurance policy's cyber extortion coverage? A. A cyber criminal threatens to release sensitive data unless a ransom is paid. B. A breach occurs due to a vulnerability in a third-party vendor's software. C. The company's website is taken offline for several days due to a DDoS attack. D. Employees mistakenly email sensitive customer data to the wrong recipients. Answer: A. A cyber criminal threatens to release sensitive data unless a ransom is paid. Explanation: cyber extortion coverage typically applies when a company is threatened with a cyber attack unless a ransom is paid. This may include threats like releasing sensitive data or disrupting operations unless payment is made. Breach due to vendor vulnerability is covered under other liability policies. DDoS attacks are often covered under business interruption policies, not cyber extortion. Mistakenly emailing sensitive data is generally a case of human error which may be covered under privacy liability coverage, not extortion. Question 17. Which of the following is a potential benefit of having cyber insurance as part of a company's risk management strategy? A. Eliminating the risk of a cyber attack altogether. B. Shifting the financial burden of managing a cyber attack to the insurer. C. Reducing the need for an internal cybersecurity team. D. Ensuring compliance with all cybersecurity regulations. Answer: B. Shifting the financial burden of managing a cyber attack to the insurer. Explanation: cyber insurance helps companies transfer the financial risk associated with cyber attacks. This can include costs related to legal fees, data breach notification, and business interruption, thereby reducing the company's out-of-pocket expenses. Eliminating the risk is not possible, even with cyber insurance. Reducing the need for an internal cybersecurity team is not a direct benefit of cyber insurance, as insurance does not replace proactive security measures. Ensuring compliance may be aided by cyber insurance, but it is not a guarantee. Question 18, scenario-based. XYZ Tech Inc. recently experienced a cyber attack that compromised its customer database. After the incident, the company had to hire forensic experts to investigate and remediate the breach, notify affected individuals, and defend against lawsuits. Which of the following coverage options will best cover these expenses under a cyber insurance policy? A. Business interruption coverage. B. Forensic investigation and notification costs coverage. C. Network security liability coverage. D. Intellectual property coverage. Answer: B. Forensic investigation and notification costs coverage. Explanation: Forensic investigation and notification costs coverage specifically covers the expenses incurred for investigating the breach, identifying its cause, and notifying affected parties. These are critical components of handling a data breach incident. Business interruption coverage only covers income loss due to operational disruptions, not investigation or notification costs. Network security liability coverage would cover liability arising from a failure of security measures, but not the cost of remediation. Intellectual property coverage does not apply to issues related to data breaches. Question 19. Which of the following is a common requirement for obtaining cyber insurance coverage for a company? A. The company must have cybersecurity policies that meet specific industry standards. B. The company must have been in business for at least 10 years. C. The company must have physical IT security measures in place, such as security guards. D. The company must have an internal legal department to handle cyber claims. Answer: A. The company must have cybersecurity policies that meet specific industry standards. Explanation: Many insurers require companies to have cybersecurity policies in place that meet specific industry standards, such as implementing multi-factor authentication, regular vulnerability assessments, or employee training programs. These measures help reduce the company's risk and demonstrate a proactive approach to cybersecurity. Business age and physical IT security are typically not requirements for obtaining cyber insurance. Having an internal legal department is not typically a requirement for purchasing cyber insurance. Question 20. What is the primary purpose of a waiting period or deductible ECA cyber insurance policy? A. To limit the insurer's liability in case of a data breach. B. To determine the period during which the company cannot file claims after purchasing the policy. C. To provide a buffer period before the insurer will cover claims, reducing the number of small claims. D. To define the amount the insurer will pay for a claim. Answer: C. To provide a buffer period before the insurer will cover claims, reducing the number of small claims. Explanation: The waiting period or deductible in a cyber insurance policy is typically designed to reduce the number of small claims and to give the insurer a buffer before covering costs. It ensures that only significant losses are covered and encourages companies to address smaller issues internally. Option A is inaccurate because the deductible is not meant to limit liability but to manage smaller claims. Option B is incorrect because the waiting period is not about delaying claims but about managing claim thresholds. Option D confuses the deductible with coverage limits. Question 21. Which of the following is typically excluded from a cyber insurance policy's coverage for social engineering fraud? A. Loss of funds due to a fraudulent email requesting a transfer of money. B. The cost of notifying customers about a social engineering attack. C. Employee training on identifying phishing emails. D. Money stolen via fake requests for payment where the employee is tricked into paying the attacker. Answer: B. The cost of notifying customers about a social engineering attack. Explanation: Social engineering fraud typically covers financial losses resulting from fraudulently manipulated transactions. It doesn't cover the costs of notification to customers, which are usually included under separate notification coverage or regulatory fines coverage. Options A, C, and D are all situations that can be covered under social engineering fraud policies. Question 22. A company's cyber insurance policy includes a retroactive date clause. What does this clause specify? A. The date when the insurance policy coverage begins for incidents occurring after that date. B. The date before which any claims for past incidents will not be covered. C. The specific incidents that occurred before the policy was purchased that are now eligible for coverage. D. The company's obligation to notify the insurer of a cyber event within a specific period. Answer: B. The date before which any claims for past incidents will not be covered. Explanation: a retroactive date in cyber insurance policies typically specifies the date before which any claims for past incidents are not covered even if the policy is in effect. This is especially relevant for claims that occur after a policy is purchased but stem from events that occurred prior to that date. Option A is incorrect because retroactive clauses limit coverage for past events, not future ones. Option C refers to coverage eligibility for older incidents, which is handled by this clause. Option D is about notification requirements, not the retroactive date. Question 23. Which of the following would most likely be covered under cyber insurance policies? Reputational damage coverage: A. Loss of income caused by an extended system downtime. B. Legal defense costs associated with a privacy lawsuit. C. The cost of public relations efforts to restore a company's image after data breach. D. Money paid as a ransom to cybercriminals in a ransomware attack. Answer: C. The cost of public relations efforts to restore a company's image after data breach. Explanation: reputational damage coverage is designed to cover the costs of public relations efforts aimed at rebuilding a company's reputation after an incident such as a data breach. Option A pertains to business interruption coverage, not reputational damage. Option B would fall under legal costs coverage. Option D is covered by a different section of the policy focused on cyber extortion. Question 24, scenario-based. A retail company experiences a cyber attack that causes its e-commerce platform to crash for several days, leading to a significant loss of revenue. Which type of coverage under the cyber insurance policy will likely cover the revenue loss? A. Cyber extortion coverage. B. Business interruption coverage. C. Forensic investigation coverage. D. Privacy liability coverage. Answer: B. Business interruption coverage. Explanation: business interruption coverage under a cyber insurance policy is designed to cover the financial loss resulting from operational disruptions caused by a cyber attack, such as a website crash. Cyber extortion is for covering ransom demands. Forensic investigation coverage covers the costs of investigating a breach, not income loss. Privacy liability relates to breaches involving personal data, not revenue loss from system downtime. Question 25. Which of the following best describes the concept of a broad-form cyber liability coverage? A. It covers only data breaches related to personal health information. B. It provides comprehensive protection against a wide range of cyber risks, including third-party claims. C. It only covers loss of intellectual property. D. It is a rider added to property insurance policies to cover cyber risks. Answer: B. It provides comprehensive protection against a wide range of cyber risks, including third-party claims. Explanation: broad-form cyber liability is a type of coverage that provides extensive protection for various cyber risks, including third-party claims, data breaches, and other cyber-related losses. Option A is specific to health information, which would be covered under specialized policies like HIPAA coverage. Option C refers to intellectual property, which is covered under a different policy type. Option D is incorrect, as broad-form cyber liability is a standalone policy, not a rider to property insurance. Question 26. Which of the following is a limitation of cyber insurance policies related to vendor risk management? A. Cyber insurance will always cover data breaches caused by third-party vendors. B. Policies generally exclude losses from breaches that occur due to vendor negligence if the vendor is not covered under the policy. C. Vendor risks are fully transferred to the insurance provider, relieving the company of responsibility. D. The insurer automatically audits all third-party vendors to assess their risk. Answer: B. Policies generally exclude losses from breaches that occur due to vendor negligence if the vendor is not covered under the policy. Explanation: cyber insurance policies often exclude coverage for breaches caused by third-party vendors unless those vendors are explicitly covered by the policy. This highlights the importance of managing vendor risk and ensuring that vendors have their own appropriate coverage. Option A is incorrect because coverage for third-party breaches is often limited or excluded. Option C is incorrect because vendor risk management is still the responsibility of the insured company. Option D is incorrect, as insurers typically do not audit third-party vendors. Question 27. Which of the following would most likely trigger the notification costs provision under cyber insurance policy? A hack of the company's server leading to the loss of customer payment information. B, a lawsuit from a former employee over a breach of personal data. C, a hacker targeting the company's physical data storage devices. D, the accidental exposure of customer credit card data through an employee's error. Answer A, the hack of the company's server leading to the loss of customer payment information. Explanation. Notification costs coverage under cyber insurance policy generally covers the cost of notifying affected parties after data breach. A breach that exposes customer payment information typically triggers notification provisions to comply with data protection laws. Option B may involve legal costs, not notification costs. Option C relates more to physical security, not notification. Option D is an accidental exposure that may not trigger notification costs unless personal data is involved. Question 28. Which of the following would likely fall under cyber insurance policy's first-party coverage? A. Legal fees for defending against a class action lawsuit after data breach. B. Compensation for a competitor's lost data due to a breach caused by the company. C. Cost of restoring data lost in a ransomware attack. D. Settlements in privacy violation lawsuits filed by customers. Answer. C. Costs of restoring data lost in a ransomware attack. Explanation. First-party coverage typically includes losses that affect the insured company directly, such as the costs to restore lost data, repair systems, or pay for ransomware recovery. Option A refers to third-party coverage, which handles external lawsuits. Option B is a third-party liability scenario. Option D pertains to legal costs and settlements for privacy violations, usually covered under liability coverage. Question 29. Scenario-based. ABC Corp has a cyber insurance policy with a sublimit on coverage for business interruption losses due to a cyber event. After a cyber attack causes a disruption to operations for several days, ABC Corp faces significant revenue losses. What should ABC Corp do to maximize the amount it receives from the insurance policy? A. Immediately file a claim under the cyber extortion coverage. B. Ensure the claim is properly documented with clear evidence of the business interruption. C. Use a third-party provider to handle all claims communications to avoid delays. D. Ignore the sublimit and file a claim for the total amount of lost revenue. Answer. B. Ensure the claim is properly documented with clear evidence of the business interruption. Explanation. Proper documentation of the business interruption is crucial for maximizing the coverage under the sublimit for business interruption losses. Insurers often require detailed records to substantiate claims. Option A is incorrect because cyber extortion coverage is not applicable in this case. Option C may delay the process and isn't necessary if ABC Corp handles the claim directly. Option D is incorrect because the sublimit will cap the amount the insurer will cover regardless of the claimed amount. Question 30. A company's cyber insurance policy has a knowledge of loss clause. What does this clause typically require? A. The company must notify the insurer within a set number of days after discovering a breach. B. The company must have knowledge of any prior losses before obtaining insurance coverage. C. The company must prevent losses by implementing advanced security measures. D. The insurer must inform the company of any known risks before renewing the policy. Answer A. The company must notify the insurer within a set number of days after discovering a breach. Explanation. The knowledge of loss clause generally requires the policyholder to notify the insurer promptly after discovering a breach or cyber event. Failure to do so can lead to the denial of claims. Option B refers to prior knowledge of losses, which may impact coverage but is not the main focus of this clause. Option C is a proactive security requirement, not a clause about notifying insurers. Option D is the insurer's responsibility but does not align with this clause.